don't raise a venture fund if you can't stand rejection. That's just going to be like a very common part of your job. And so there's this like very scary period of time where you're not making any money, you're unclear that things going to work, you're getting a lot of rejections. The blockchain industry is evolving, deploying across a variety of industries.
What would you say were those nuanced differences?
In fundraising for LPs, it's actually rational for most LPs to make a commitment or not.
Welcome to the Inquisitive VC. Today I'm excited to have with us Andy Kangpan, founder and general partner of Metalayer, a $25 million crypto venture fund focused on blockchain adoption across financial services. Andy's journey is particularly compelling. From his early days as a generalist at Two Sigma Investments in 2017 during the ICO boom to becoming a focused crypto investor, leading the firm's private investments in the space. After a decade in venture capital, and witnessing the evolution from infrastructure building to real-world blockchain deployment, Andy founded Metalayer with partners David and Mickey following the FTX collapse, recognizing the need for a specialized fund without institutional constraints. In this episode, we'll dive into Andy's perspective on the shift toward financial services adoption, his approach to building a concentrated 30-company portfolio, and the philosophy behind Metalayer's balanced approach to both equity and token investments in the evolving crypto landscape. This season of the Inquisitive VC is proudly sponsored by Carta. Carta is transforming how private capital operates, connecting founders, investors, and LPs through purpose-built software and services. Trusted by over 65,000 companies in over 160 countries, Carta supports everything from equity management to fund administration, powering nearly $185 billion in assets across over 9,000 funds and SPVs. Whether you're building a company or managing a fund, Carta is the modern infrastructure private markets have been waiting for. If you'd like to find out more, check out their website in the show notes. Thanks for joining us, Andy. Happy to have you here today.
Thank you for having me. Excited to be here.
Fantastic. I wanted to start with, your background a little bit. So how you got into crypto and how you got into the world of, private investing and venture capital.
Yeah, definitely. So I came into the crypto ecosystem with from the venture capital perspective. So I've been in the VC space for about 10 years now. Most of that time was at a firm called Two Sigma Investments. So I sat on the private investments team there. And initially I started out as a generalist at that firm. Crypto was always part of my focus there. So I joined the team in 2017. At that point in time, there was a lot of excitement about the ecosystem, given the ICO boom that was happening. And I worked closely with a few of my colleagues there who are now my partners at Metalayer on leading research for the organization across a number of different dimensions, but ultimately led to some of the firm's early investments in the ecosystem. So that was really my first real foray into the space. And over time, I started to spend more of my professional and personal time looking into the space. Ultimately, around 2020, I made the decision to shift all of my attention on the category. And at that point in time, basically started to lead all of the firm's private investments in the category until I left a little over a year ago.
Understood. And could you talk a little bit about the type of investing you did at Two Sigma? Was it private, like venture capital style? Was it liquid? Curious on that part.
The investment activity happened across a few different buckets. The bulk of the focus was early stage private investments within the venture capital mandate at Two Sigma. So in that capacity, we were focused on a mix of equity and token-based investments at the seed and Series A stages. Pretty broad thematic focus, but I would say it tended to have a tilt more towards applications in the financial services ecosystem. So a lot of like trading infrastructure, DeFi applications, things of that nature. There was a second bucket of activity, which was investments into the crypto space that had a little bit more of a strategic lens. So I was tapped to help lead an effort that got started around 2021 to really start building connectivity into the space through minority investments in primarily market infrastructure companies that were catering towards more institutional players on the trading side. And then lastly, around that time, the organization was exploring the opportunity to trade crypto as an asset class. And I had the opportunity to work pretty closely with a number of teams there. Um, uh, I probably shouldn't get into too much detail exactly what sort of what the strategies were there, but I played a pretty active role in some of the early phases of that effort. So those are the three primary categories that I focused my time on when I was at Two Sigma.
Okay, great, really helpful. And I guess now at this point, curiously thinking on, when you were leaving Two Sigma, what was the thinking around leaving to start a new venture fund? How do you come to that type of decision? How do you find your partners who are willing to kind of take this leap as well? Would love to kind of go down that mindset.
Yeah. So um, this all really started to come together after in 2023 after the collapse of FTX. Within the context of the Two Sigma organization, it became clear to me, at least, that building a crypto strategy in the way that I felt was the right way to go about it was really difficult to do within the context of a larger investment management platform. Um, and it's interesting. I spoke with a lot of my peers at other firms at different HFT funds who faced similar challenges at that point in time, and I think there are basically there are a variety of issues, some specific to the firms themselves, but I think the commonalities are that at the time, at least, crypto wasn't a big enough market from a volume perspective for a lot of these firms to dedicate a lot of resources to. So it was a space that clearly was growing and was interesting, but just not something that could be put at the top of the priority list. And secondarily, if you remember at that point in time, the regulatory environment for crypto, especially in the US, was extremely adversarial. So the regulatory risk that these firms faced when assessing the opportunity was pretty significant. So taking those two things together, there's a lot of friction in sort of pushing forward on a crypto strategy, especially after the market went sideways. But the thing that really catalyzed it for me was that sort of friction caused me to take a pause and think about if I could start if I could build a crypto strategy without these constraints, like what would that actually look like? And I reconnected with my partners, David and Mickey, who I mentioned worked with me at Two Sigma for a period of time. And we started to just spitball ideas around what a fund would look like, where we would start, what are the things that we would focus on from an investment perspective, what are the competencies that we could pull into the fold that would be somewhat unique, and how would that evolve over time. And it just became clear to me through those conversations that um, there was a really exciting moment in time happening in the space to start a new fund and getting to do it with partners that I really respect and also enjoyed working with was something I wanted to pursue. So it was those sort of combination of things that came together that ultimately led to me wanting to take the leap.
Understood. Okay. And so while you are having these conversations, spitballing what a fund would look like, would love to hear you talk through how you got to where you are now with the fund in terms of, how you think about portfolio construction, how you thought about sizing the fund, the types of checks you write, like a little bit more detail on how you came to those decisions would be great.
Yeah. So we can start with the thematic focus of the fund. So um, I think the key thesis of the firm is of Metalayer is that the blockchain industry is evolving from one that has a singular focus on infrastructure building to one that's focused on deploying blockchain technology across a variety of industries. And specifically, we see adoption happening in the financial services ecosystem. We felt strongly at that point in time when we were talking about what would a fund, if we were to start it now, focus on from the investment perspective. We saw a lot of tailwinds at play, particularly with the sort of increased interest in institutions to both trade crypto assets, but also look at using different crypto technologies as a way to build more efficient and innovative financial services. So we felt that was going to be a trend that really drove the ecosystem forward in the midst of the sort of market consolidation that was happening at that point in time. So that was really the driving force of like what we wanted to invest into. In terms of the fund model, we knew that we wanted to start with a venture capital fund. It's where the three of us have spent most of our time professionally. Myself at Two Sigma, my partner Mickey spent also a lot of time at a firm called Workbench, which is an enterprise software focused fund, in addition to Two Sigma. And then my partner David also spent time at Green Oaks, which is another firm in the venture capital space. So we knew we had a lot of shared interest and passion for investing in the earliest stages of an entrepreneur's journey. And we also knew that, at least historically speaking, smaller funds tend to outperform larger funds from a returns perspective. And looking at the crypto space in particular, that's historically been true. But also, we felt that given the size of the market, a smaller fund would make the most sense, just in terms of the number of opportunities that we felt excited about that we were seeing and the size of rounds that we thought would make sense. And so we ultimately landed at a sort of a smaller fund size from a fund model perspective at 25 million. And we take a relatively concentrated approach to portfolio construction. So we're looking to build a portfolio of roughly 30 companies and investing on average about 700K into those companies over a 3-year period. And yeah, I won't get into like the weeds of how we got to those numbers, but we feel it's ultimately just a good pace that we can execute against in order to build a portfolio of exciting businesses, and all focused on pre-seed seed investments.
Okay, makes sense. And it sounds like all three of you come from interesting backgrounds. The three firms sound quite different. As far as I know, Green Oaks, they do a lot of more growth stage, very large checks. Workbench being not so much crypto. How do you guys come together, work in a crypto fund, align the way that you think and make decisions? How does that kind of work out for you guys?
Yeah, we the benefit of having had a broad set of exposure to a variety of venture funds in the space is, we have a lot of institutional training and how to think about finding deals, how to think about assessing those opportunities, and how to go about getting allocation into competitive rounds. And that's really benefited us nicely, at least in sort of the early phases of deploying Fund One, in our ability to invest in the companies that we've been excited about to date. We've always had a shared interest and passion for crypto. As mentioned, when we worked together at Two Sigma in 2017, we were like those young guys basically on the team that were trying to convince a big hedge fund to do more stuff in crypto. And like we were going through all the white papers, trying to explain to the investment committee what all these new networks were, what all these applications could be. And we were also, even after we sort of went our separate ways, still very excited about crypto, and continued to stay in touch, despite the fact we no longer were colleagues. And so that shared interest has continued, to the to the journey that we're on now. And I think we've benefited a lot from having a variety of experiences. Myself primarily coming more from the investor side of things. My partner Mickey, when he left Two Sigma, joined Chainlink as an early employee there. So he was able to get firsthand experience building a blockchain network, particularly in a phase when that protocol was growing quite quickly. And my partner David comes at the space more from the engineering perspective, where he actually spent most of his time at Two Sigma on the trading side of the house. And when he was at Green Oaks, he was mostly focused on engineering, building out infrastructure for the investment process. So I believe we come at the space with a really unique set of experiences and competencies that gives us a really unique perspective, while also having a lot of experience in crypto and shared passion for the future of the space.
Yeah, gotcha. Okay. Would love to understand the journey of fundraising for you. Like I understand all three of you probably didn't do much fundraising before starting Metalayer. So would love to kind of understand how was that journey for you? What was the most surprising parts of fundraising?
Yeah. Well, it was very hard, as you'll probably hear from most first-time fund managers. And, it wasn't surprising that it was hard, but I think how hard it actually was when you're in that process was somewhat surprising. Maybe we're a little naive thinking that given our sort of institutional background, would be more prepared for it, but nothing can really prepare you for it until you just go through it. I'd say the things that were surprising was the intensity of the emotional roller coaster ride was very significant. So, there's just a lot of factors outside of your control. Everything from the market environment at large to the particular situation that an LP has, where an LP is in their fund cycle, what an LP likes to hear in a pitch, all those kinds of things. And there's a lot of uncertainty, especially at the outset of like whether or not you're even going to get the fund off the ground. But in order to even have a shot at getting off the ground, you have to leave your job and you have to take that leap. And so there's this like very scary period of time where you're not making any money, you're unclear that things going to work, you're getting a lot of rejections, and so that sort of a roller coaster ride is really intense. Um, yeah, and then I wouldn't say this was surprising, but venture fund fundraising is challenging in many unique ways relative to startup fundraising, um, which we can get into. But there was sort of a lot of unique nuances to like managing a fundraise process that was surprising once you get into it, and sort of difficult to manage. So that was an interesting growth experience for us going through it.
Yeah, for sure. What would you say were those nuanced differences? And
Yeah, in fund fundraising for LPs, it's actually rational for most LPs to wait until the very end of the process to make a commitment or not. Um, there's a lot of reasons for that, but I think the probably the biggest one is that the price remains the same, whether or not for the LP, like whether or not you commit at the beginning or the end of the process, and you get way more information at the end of the process around what the portfolio is going to look like, how the team's working together, who the other investors are. So like creating deadlines and process around something where everyone's incentivized to wait till the end to give you an answer, very challenging. Um, and the sheer amount of yeses you need to get to in order to get a fund off the ground is also somewhat distinct from startup fundraising. Um, uh, and typically for most funds, you have like a couple to a few dozen LPs in a fund, whereas in most startup rounds, you might have a handful of investors that fill up the round. And it's not to say one is any harder than the other. It's just there are a lot of dynamics at play in the venture fund fundraising, which makes it on average a much longer process and a lot more ambiguous around how you sort of create a structured uh, process around it. So that was quite interesting.
Yeah, okay. And what would you say was a rejection that you had that really stuck with you?
Um, well, going back to the comment about it being a dynamic that you need to get into a lot of yeses, like I think one of the things that became very clear to me through the process is that venture fundraising to a certain extent is really just a numbers game. Like you need to talk to enough investors to get to the yeses that you need. Um, and the generic advice that I'd probably give people now is like, don't raise a venture fund if you can't stand rejection, because that's just going to be like a very common part of your job. And especially for people who come from an investor role, like that's very much something that you're not used to because you're used to sitting on the other side of the table. So that's something that you will need to get used to. I won't name names, but I would say the rejections that are really frustrating are the ones that come from what I call time bandits, where like they're investors that express a lot of interest and give you a signal that they can action, like to make a decision, but for various reasons aren't actually in market, aren't able to make an investment given where they are in their like fundraising cycle. And then also, but like do the work of like spending time with you and getting to know you. And you know, there's different reasons why people do that, but I think those end up being really frustrating. And there are a few of those sort of process in particular that were quite frustrating to deal with. But I would say yeah, I think those were the ones that stuck with me. But I'll hold off on
Yeah,
naming
fair
specific.
enough. Fair enough. Yeah,
Yeah.
one of the things when people were asking me about like fundraising was I think one of the big differences I saw between startup fundraising and fundraising for a fund is that for startup, I feel like VCs and even angels to an extent are quite out there in the sense of, they want to look for interesting companies and do a deal, where LPs are very much the opposite. They're like quite hard to find. A lot of them are really not um, looking to do a lot of deals, so it's quite a big job to kind of convince them to come around. I'm not sure if you had that type of experience too.
Yeah, there's a segment of LPs that are like known, like you know the fund of funds and the really big family offices that do this like very commonly. But there's a whole universe of LPs that um, you'd be very surprised to learn that they are actually investing in funds or open to investing in funds. So unearthing the universe of LPs in and of itself is a challenge. Um, and so yeah, a big part of the job became prospecting, like actually surfacing up names that you could pursue and build relationships with. And the other challenging dynamic with venture fundraising, by the way, is that it's a very long commitment for an LP, as opposed to raising a liquid fund, which has um, a faster time to liquidity. This is a very long commitment, 7 to 10 years often. So um, that's also commitment you're asking someone to make oftentimes without really knowing you for very long. So um, that's a sort of dynamic that you have to manage and get around at times. So that's another unique sort of challenge of the process.
Yeah, right. Is there any advice that you received from other, GPs or investors that you spoke to before starting fundraising that just turned out to be completely wrong or was unexpectedly true?
Um, well, there's definitely advice that was true. I don't know if it was unexpected, but um, a couple of things come to mind. Um, one piece of advice I got actually from a number of people was uh, get going, like just um, start investing and get to a first close as quickly as you can. And um, that ended up being really good advice for a lot of reasons. Um, one of the psychological challenges of the fundraise is when you set out like when you go out to raise, you tell people that you're targeting a certain amount of money, and that can become a goalpost that really only you care that much about. Um, and you can actually raise a fund that's smaller than the target and still have a viable fund one, to sort of demonstrate that you can get access to good deals and execute a venture strategy. Um, and so, being wed to this like number that you start with at the beginning of process, can sometimes be a not a productive thing. The other thing is that it's very helpful in a fundraise, to get going, make some investments, and just start demonstrating that you can execute, because the conversation shifts away from the sort of vision and then more about like, here are the deals I'm doing. And that ends up becoming a more fun thing, I think, for both sides to talk about, as opposed to just like a very high level market thesis. So that ended up being really sort of great advice that we took to heart through the process. Um, uh, I mean, another piece of advice that we got that we didn't do the best job of listening to, which interestingly, I would probably give this advice to founders too, is your pitch is going to get better over the process. It's going to get more concise. It's going to get more focused. It'll be more concrete. You'll be able to speak more emphatically about the things that you're excited about, all that stuff. And so I would like manage the process appropriately, where the sort of um, the checks, the conversations where it's like higher stakes, like larger checks, or like more sort of professional quote unquote LPs that maybe are more used to hearing the pitch, probably worth saving those conversations for when you're actually well prepared to have those conversations. So, warm up as much as you can, sort of build momentum before you get to those conversations versus like just trying to do it all at once. And so that advice ended up being in retrospect really good, although I don't think we necessarily did the best job in following that advice. But I think if I had to do it over, that's definitely one thing that I would try to pace better.
Yeah, that's some great thoughts. Um, okay, I'd love to understand how you're thinking about the market right now in terms of, crypto venture. There's a lot of kind of people have a lot of opinions about crypto VCs on Twitter. How do you kind of feel about the market right now? And also, considering how tokens are doing for venture investors, in the past few years, and how you feel about that compared to, equity investing in your current strategy.
Yeah. So from a market dynamics perspective, um, I think we're in a really exciting time in the space. Like undeniably, um, uh, stable coins are top of mind for everyone. I think Circle's IPO really has pushed that conversation out of just crypto native circles into the broader public. And so as a result, that's been driving a lot of the deal activity in the venture space, where you have a lot of capital going towards stablecoin issuers, stablecoin infrastructure, payments related companies, things of that nature. But I would say generally, like that trend and sort of the sort of broader push for crypto being fused into the financial industry has really reignited, I think, interest in the space, at least, especially in like the public markets. Um, uh, it's interesting in the crypto venture side of things, while the space has started to take up in growth in the sense of like capital deployed, it's still relatively subdued compared to where we were a few years ago. Maybe this is actually the steady state of the industry on the crypto venture side, but it does seem like it's artificially constrained because the ecosystem is nursing like a hangover still from that like 21, 22 era of mania and excess. So the big thing there is that as most folks listening to us probably recognize, like raising a new fund right now, both for emerging managers and for existing funds, is challenging. There's a lot of anecdotes that I hear of just that continuing to be a dynamic and the capital raising side of things. So as a result, there's a trickle down effect to like the sort of size of the industry in terms of just total capitals that can be deployed into the ecosystem. So despite the fact that many assets are reaching all time highs on the public side of things, and IPOs are happening where you know um, uh, uh, people are sort of getting excited again about crypto equity businesses. Venture still kind of remains subdued. It's really great for funds that have capital to deploy, because that creates an environment where um, it's not always the case, but I think on average valuations still are somewhat reasonable compared to what we saw again in 21, 22. So I think it's an interesting dynamic from that perspective. Um, the crypto equities versus token debate is an interesting one as well, where interestingly, when we set out to raise the fund, we made it very explicit to LPs that we would be balanced in our approach. So the fund model we sent to LPs had an allocation of 50% of our investable capital going towards equity deals and 50% of our capital going towards token investments. We got a lot of questions actually about how we think about equity investing, given that historically there hasn't been a lot of liquidity and the time to liquidity tends to be on average longer. Um, and so right now, what's interesting is like the tokens in the past few years, at least, have been underperforming a number of equity investments. Circle's IPO has obviously done really well for its investors. Hidden Road was acquired for a very significant amount. Deribit, Bridge, and a handful of others. So that's really flipped the script a little bit on like what people find it's interesting. I still think that token investments are going to perform really well. One of our early investments in the fund was in Athena, and they've done really well from a token price perspective. So I think there's still room for projects to launch tokens that are going to perform well. I just think that there's going to be a greater amount of I think the public markets are a little bit more discerning. So like the token, the project actually needs to have a compelling product, and increasingly what we're seeing is projects that generate fees or revenue are actually doing relatively well from a token price perspective compared to the projects that are a little bit more amorphous in terms of like what the product is and what the business model will ultimately be. So I still think if projects are sort of tick those boxes, they have a chance of doing well. But I also continue to be bullish on equities. Like I think we're entering a market now where public markets are much more receptive to the crypto pitch. And also there are a lot of strategic buyers making a big push into the ecosystem that are looking to make acquisitions to accelerate the digital asset strategy. And we'll see more M&A activity as a result. So we continue to remain balanced in our approach. I think both types of investments have pros and cons, but I think a venture portfolio that has balanced exposure to both of those asset types will outperform any one portfolio that's heavily weighted towards one side or the other.
So when you say you have about 50-50 equity tokens, is that like private token investments or liquid token investments?
So those are all private token investments.
Okay.
We at the moment in the venture fund don't do anything on the liquid side, so we're not purchasing tokens on the open market.
Okay, cool. Makes sense. Is there a company that you may have invested in already from the fund or previously that really, exemplifies what are the types of companies Metalayer wants to invest in?
Yeah, I think that I'll do like the classic venture comment, which is like all of our companies are great. They're all representative of all the companies that we'd want to invest in. But the example that I throw out there, which I often talk about, is because I think it's easier to understand, is there's a company called Crossover Markets. So
Okay.
Crossover Markets, it's an equity business. They are building an institution-only exchange that is bringing the ECN model to the digital asset space. Basically, what that means is they are focused specifically on the exchange side on executing the trades, but they're not focused on other aspects of what exchanges in the space today focus on, meaning like custody and brokerage. So what you see from a market structure perspective today in crypto exchanges is that these exchanges like Coinbase, Kraken, and others are vertically integrated for the most part. So they tend to offer these services as a bundled platform to their customers. If you look at other asset classes that have significant institutional volume, so equities, FX, commodities, etc., the market structure on the exchange side looks very different in that these things are typically separated. So you have different service providers focused on custody, different prime brokers in the space. You have exchanges that are focused on execution, and we believe that the digital asset space is moving in that direction. And Crossover Markets is the first to market and the market leader currently in building that exchange model in the ecosystem. The founder is also very representative of the type of entrepreneur we like to back. So Brandon was formerly the head of FX Prime Brokerage at Jefferies. He was also an executive at an organization called FXCM. So he has deep connectivity into the trading ecosystem, but also very intimately understands crypto from a market structure perspective. And they've quickly become a leader in the space in terms of working with the leading institutions in the ecosystem in terms of market participants on the exchange. So they've done really well, and I think are a really good example of the type of business that we want to be supporting in the fund.
Cool. Very cool. Final question. What's a secret obsession of yours that nobody knows about?
Oh man, I um, uh, I'm very into skateboarding. So it's a hobby that I picked up when I was really young. That um, when I moved to New York for college a while back now, but reignited my passion for it because New York City is like a really big mecca for skateboarding. There's like a lot of famous parks and spots that people skate and skate videos. So I got really excited about it again when I moved here and picked it back up. And so I still actually skateboard a decent amount, although I'm older now and more prone to injuries. So and not as much free time as I used to have. So I don't really do anything so risky anymore, but it's still a great way to get around. And I still, to this day, keep up with the skateboarding scene, for lack of a better term, like uh, uh, the major brands and like the skaters they're sponsoring and like the state of the sport and that kind of thing. So yeah, it's something that I'm really interested in personally that I don't talk about too much in crypto circles.
That's really cool. That's really cool. Yeah, I haven't heard that before as well. And when I ask people these questions, so it's cool to see a skater VC out there. Um, but cool. Thanks, Andy. That's all the questions that I have for today. Really appreciate your time. I think that it was a great chat.
Thank you. Appreciate you having me. And yeah, it was great having a conversation.